This is Chapter 7, and it's activity-based costing. In the previous chapters, we looked at just using one overhead rate for all of your products. But sometimes this can result in over or under costing products or services. So here with activity-based costing, we're using a system that can refine these overhead costs to make them more specific to certain products to reduce your cost distortion. So by using more than one overhead rate, the cost can more accurately reflect the actual usage of overhead by the various products and services. So if different departments incur different amounts and types of overhead, you would want to use activity-based costing, or different jobs or products use the department resources to a different extent. So why do you want to refine these costs even more? So rather than just using one predetermined overhead rate, why would you want to break this down into more detail? Well, it leads you to a better understanding of the cost drivers. So if you just get one global number, it's hard to figure out what's in there and what's really driving your cost. It can lead to better decision making. It leads to better estimates of your product cost. And some of the simpler ways of allocating overhead, like using one rate, doesn't always present you with the true picture of the cost of making your product. So if you want to use departmental overhead rates, a sign that it might be needed is if managers really don't understand their costs and profits, and the cost system could possibly be outdated. So here you're looking at a quick review now of what we did in the last chapter, where we had one predetermined overhead rate. So you recall we had the manufacturing cost of $1 million, and we had the direct hours, labor hours, $62,500, $16. So then assume that you're making just two products. So you're making a dental product is gold crown and a mouth guard. So they're both going to be assigned overhead at the same rate, $16 per direct labor hour. So the gold crown actually takes longer to make, so it's 11 and a half hours. So they're going to be allocated $184 for that product, whereas the mouth guard, it's only 2 hours, so $16, so they're going to be allocated $32. So does this give the best picture of the product is what we want to know. So what you find is different departments incur different amounts and types of overhead, so everybody doesn't use the overhead equally. So this is why you would want to break this down into activities. So when you look at the cost, so the $1 million in overhead, what you're doing there is you're breaking it down into $400 for casting and $600,000 for fabrication. So what you want to do here is look at the cost drivers, what's driving the casting and the fabrication. So you're going to calculate your allocation base. For casting, you're expected to incur 12,500 hours, and for fabrication, you're expecting to incur 50,000 in direct labor hours. So using that information, you're going to calculate a cost per hour for casting, which is $32 per direct labor hour, and fabrication is $12. So rather than using the predetermined overhead rate, the one rate, which you'll recall was $16, now what we're doing is we're breaking down your $1 million in overhead into two major components, casting and fabrication. So now what you would do is you would look at how this is being allocated out. So for the gold crown, so what you would do is we calculated the rate to be $12 an hour, and we know we're spending 7.5 hours, so it's $90 in fabrication, and then in casting it's $32 per direct labor hours. They use 4 hours, so it's $125. So the total amount of overhead allocated to the gold crown is $215. Step 4. So you want to allocate your cost to individual jobs using the departmental overhead rate. So what we're trying to do here is, rather than just assign the overhead to the gold crown and the mouth guard based on the one rate, on the $16, we've now broken down our cost into fabricating and casting. So we can see here from the previous slide, we calculated the rate for fabrication is $12 per direct labor hour, and they're spending 7.5 hours on the crown. So multiply that out, it'll give you $90 in fabrication cost, and then in casting cost, we've calculated that that is $32 per direct labor hour, and they're spending 4 hours, that's $128. So in total, you are allocating $218 in overhead to the gold crowns. Now, applying the same concept to the mouth guard doesn't use any casting. It only uses fabrication. So that's $12 an hour. They spent 2 hours in fabrication, so it's $24 in overhead that you're assigning to the mouth guard. So that gives you a better picture of what it's actually costing you to make the crown versus making the mouth guard. So then, if what you're doing here is the plant-wide rate could be causing some distortion. So when you use the one rate, the $16, that gave you $184 in overhead for the gold crown, whereas when you broke this down into a casting and fabrication, the actual overhead should have been $218. So you've undercosted your product, or undercosted the gold crowns by $34. And on the flip side, when you look at the mouth guard, the plant-wide rate, the predetermined overhead rate, was $32, and then when you use your departmental allocation, it was only $24. And so this product, the mouth guard, was actually overcosted because you were assigning both fabrication and casting to both products, but both products weren't using that. Only the mouth guard was using the casting and the fabrication. So that's why in this particular example, you'll see that this gives you a better picture of the cost of each of these products. Another thing we want to look at, so that was looking at the departmental usage. So now, rather than looking at departments, so in the previous example, these two products were using fabrication. They both use fabrication, but only the gold crowns use the casting. So now another way to look at it, rather than looking at how much of each department a product is using, you look at all the activities rather than departments. So you're just looking at your cost on a different basis. Like your overhead cost is still $1 million, right? But all you're doing is looking at it at a different vantage point. So here, with the activity-based costing, what you're doing here, instead of looking at casting and fabrication, you're looking at all the activities that make up the manufacturing process. So you set up your machine, materials handling, fabricating parts, supervising the assembly, inspecting the products, and packaging the products. So these are 6 activities that would generate overhead. So in a problem or in a department, in a company that you're working for, you would be given the activities and the cost pool. So again, what you're doing here is breaking down the $1 million into all of the major activities. So receiving, $80,000, preparation, $200,000, fabrication, $300,000, casting, $150,000, finishing, $170,000, and then cleaning and packaging, it's $100,000. So it's still the $1 million, but now we're getting more granular. We're breaking it down into these 6 activities. So we have the 6 activities and we have the cost. So now we need to figure out what is the cost driver of each of these activities. So receiving, that would be based on the number of jobs. So the estimated number of jobs is 8,000. Preparation, the cost driver for that would be molds. So 16,000 molds would be the estimated. Fabrication, the allocation base here is direct labor hours, and it's estimated that 50,000 hours would be used. And casting, again, it's the allocation base would be hours, so it's 12,500. Finishing, the number of units that you would finish, 34,000. And then packaging, you're not packaging on a per unit basis, you're packaging several products together, so it's a job, so it's 8,000. So So from the previous slide, you're given your cost for each of the 6 activities. Then you have an allocation base for each of these activities. So what's driving preparation, say, of molds? Well, what's driving that is the number of molds. It kind of makes sense when you think about it. So now that you have your total cost, you know you're given the number of units for each of the allocation activities, then you can calculate a rate. So for receiving, the total cost associated with receiving is $80,000. We know there's 8,000 jobs, so receiving is going to be costing $10 per job. Preparation, $200,000. We know we prepared 16,000 molds, so 200,000 divided by your 16,000 molds is $12.50 per mold, and so on. When you're doing activity-based costing, you've got to have it as a cost per each activity. So the next step is to apply the cost. So in here you have your activity, so you're receiving, we just calculate as $10 a job, one job, $10. So we're using the 6 activities and we're using information on how much of each activity was necessary to produce one gold crown. So preparation, 2 molds at $12.50 per mold, $25. And fabrication and casting, that's based on labor hours, and you're given your cost per hour and the number of direct hours, and so on. So now you see when you break down your overhead to a lower level, like activities, now your costs are more granular, it takes more time, but it is more accurate. So you end up with an manufacturing overhead allocation of $145.50 to the gold crowns. So when you compare, there's 3 methods. The first one was the $16, the plant-wide overhead rate. Then we got a little bit more accurate here because with the departmental rate, we looked at how much of fabrication and how much we were using for each of these products. So here we come up with, on activity-based costing, we come up with $145.50 for the gold crown and $39.50 for the mouth guard. So it doesn't change the total amount of overhead. The overhead is still the $1 million. What you're doing is you're trying to find a way to accurately reflect how much of the overhead each of your products is using. Because if you don't have that allocated accurately, you could be charging too much for your product or maybe not enough. So either way, you're not making as much money as you could make because you don't have accurate information on your costs. So we looked at cost hierarchy. So there's 4 levels. There's the unit level cost, there's batch level, product level, and facility level cost. So unit level cost, this is incurred for every unit. A batch, so if you say you're shipping your product out in batches and you've got 10 units in a batch, so it's number of batches. Then you could be a product level cost. So a product is a cost that's incurred for each of the activities related to the product, and it doesn't matter how many units or batches are produced. And then facility level costs, these are costs that are incurred regardless of the products or batches used. Of course, there's always some advantages and disadvantages, related to activity-based costing. It's obviously a more complicated and complex way to calculate your costs. It takes time to do that. It's expensive to operate. Plus, activity-based costing is not compliant with generally accepted accounting principles. So you can use activity-based costing for your internal statements, for your internal financial reporting, but for external, you can't. So, you'd only want to enter into using activity-based costing if it's giving you significantly more accurate information. And when you do the calculation, if you find that the amount of overhead allocated out is not all that different from activity-based to the one plant-wide rate, then you probably wouldn't bother to use it. It wouldn't make sense. So we have all this information that we've generated from activity-based costing, so we're not doing it, just to do it. Obviously, that information is going to be used by management to make decisions around the pricing of their product. If they have more accurate information about how much each product really costs to make, then they're going to have to look at their product mix. They might want to sell more of the more profitable products, for example, and they'll be making planning and control decisions. And the other interesting thing is when you break down your cost into activities, when you see all the activities, you might be able to identify areas where you can cut some costs. So maybe an activity is costing a lot, so maybe you look at, say, an activity could be packaging. So, is there something you can do around the packaging to reduce costs there, for example? When you're looking at your pricing and product decisions, oftentimes you'll end up changing the prices after you've identified the most accurate estimate of the cost. You might decide to be more aggressive in marketing your higher profit products, and you might shift your product mix away from the less profitable products. So when you are looking at implementing an activity-based costing system, the benefits are usually higher if you're operating in a very competitive environment, because it helps you make better pricing decisions and you can pinpoint some cost-saving opportunities. Particularly when you look at all the different activities, you might think, wow, that activity should not be costing that much. But when it's all lumped in together in one overhead rate, you don't really see that information, but once you see it, then you probably would want to deal with it. But the benefits are higher as well when there's a risk of cost distortion. So many products are consuming varied amounts of different products. And if you have high indirect cost and high variation of volumes between the products. So these are all areas where you'll be making some decisions. The cost of adopting activity-based costing. So if you've already got your accounting system is already set up to easily capture it, and you've got the technology available to do it. And most companies would say that it's worth the cost to implement it. It's not cheap or easy to implement it, but it does help you get a better understanding of your cost and where you might be able to reduce some cost and therefore increase your profits. So that concludes the PowerPoints on this chapter, and again, make sure you review the videos that I've recorded for the demonstration problems.